So good afternoon, everyone. Welcome to today's webinar on the UK Civil Society Almanac. What can the latest data tell us about charities' challenges now and in the future? It's great to have so many of you on the call with us today. So the UK Civil Society Almanac this year has been sponsored by Saracen and Partners, and we're delighted that Richard Maitland from Saracens is joining us on the webinar today. So my name is Josie. I'm Capacity Building Programmes Manager here at NCVO. And along with Richard from Saracens, I'm delighted to be joined today by my colleagues at NCVO, Lisa Hornung, Data and Research Manager, and Elizabeth Chamberlain, Head of Policy and Public Services. So I don't have to tell you that looking at this year's Almanac data, which covers the financial year 2017-18, that it is essentially looking at a very different world to the one we are living in now. Then it was hard to imagine the possibility of the world's economic activity coming to such an abrupt halt. Whilst the immediate assumption for some, therefore, might be that the data this year is irrelevant, we at NCVO believe that by understanding where the sector was going before it came head-to-head with the harsh reality of 2020, we can better understand the challenges the sector may face in the wake of COVID and get new insights about how we should respond. And we do hope to get you started with some of this thinking in the webinar today. So before I hand over to Richard from Saracens and Partners to tell you more about their work and what we're going to cover today, just a few housekeeping points which are probably familiar to those of you who've been on our webinars before. So we will have 15 minutes at the end for questions, so do feel free to submit your questions as we move through the presentation. And then a final reminder that we will be recording the webinar, and the recording will be sent to you afterwards, and it will also be available on our NCVO know-how site. You should have already received the slides. So without any further ado, I'm going to hand over to Richard.
Josie, thank you. I never think it is the role of the sponsors to say anything more than a fantastic well done to everybody who pulled all this data together. I'm a great believer that if you don't measure it, you don't get to manage it. And I think books like this are fabulous. And Saracen and Partners, I hope you know, we're very committed to the sector. We're one of the largest asset managers of charity portfolios. So this is just the sort of thing we like to support and like to ensure continues. On that note, I am going to hand back to the team at NCVO to take us through the data. Thank you.
Thank you, Richard, and thank you, Josie. As Josie said, in this webinar, we will discuss the latest Almanac data and what it means for the sector. We will look at the size and the scope of the voluntary sector, its finances, including income, assets and reserve, workforce and volunteering. We also have some useful practical resources that we will signpost to just before the Q&A at the end of this webinar. But before we go into the details of this year's findings, what actually is the Almanac? The UK Civil Society Almanac is NCVO's annual research publication on the voluntary sector in the UK. Most of the data is based on administrative sources, including charity financial accounts, but we also draw on official surveys from the ONS and DCMS. Unfortunately, as Josie already said, it takes some time until those accounts are submitted, cleaned and analysed, and therefore our latest data covers the financial year 2017 and 18. In our first section, we want to look at the size and the scope of the sector. How many organizations are there and how has that changed? But before we get into the data of the Almanac, we want to get an idea of the profile of our audience today in this webinar. So you will now see a poll popping up on your screen where we ask you about the size of your organization based on the definitions that we are using in the Almanac. So don't worry if this question is not relevant to you because you might not be working for a voluntary organization. The screen will just disappear in a few seconds on its own. So there's no one definition of small. The Small Charities Coalition, for example, defines small charities as those with an income under 1 million. However, we use a different definition and define micro and small as those with an income under 100,000. We will now hopefully see soon the findings on our screens. Oh. Oh. I can't see the results. I'm very sorry. I'm not sure if you can see them, but I'm going to move on to the next slide and we'll try and fix this as we go along.
I can talk you through them, Lisa, if you want,
Okay,
if that's helpful. So we've
yes.
got the largest section being medium-sized organisations with an income between 100,000 and 1 million, with 38% of the audience representing those organisations. Similar representation from large organisations with an income between 1 to 10 million, and then 13% from micro and small organisations. So yeah, it's mainly the kind of medium and large organisations that seem to be on this webinar.
Thank you, Josie. As we now go through the results of the findings from the Almanac, we can see how the audience compares against the sector as a whole. But one of the advantages of the Almanac time series is that it allows us to track the size of the sector over time. In 2017 and 18, there were 166,952 organizations in the UK. Over the past 5 years, the total number of organizations has been relatively stable. However, when we look back at the 2008 financial crisis, we can see that the sector saw a fall in numbers of 4% between 2007 and 8 and 2009 and 10. Numbers rose again in 2013-14 and have since then been almost stable. In terms of the profile and makeup of the sector, the majority of organizations are small and operate locally. 81% have an income of less than 100,000. That's what we call micro and small. While they are larger numbers, they only make up 4% of the sector's income. On the other end of the scale, we have those with more than 100 million income, what we call the super majors. They account for less than 1% of all organizations, but 23% of income. Most of them work on international or national level, and they account for 30% of the sector's grant making. As Josie was describing what the profile in our audience looks like, you can see that we are a bit overrepresented across the larger charities when we compare this to the makeup of the sector. When we look at trends over time, we can see that the makeup of the sector appears to be shifting towards bigger organizations. The number of organizations with an income of more than 10 million, which combines major and super majors, has continuously increased over the past years. At the same time, the share of the total income has also risen, as you can see in the chart on the left side. However, the detail behind that data is more complex. Some of the growth in the bigger organizations is linked to a natural expansion of income bands. Over the years, our income band classifications have stayed the same. However, the income of organizations has often grown with inflation, which then resulted in movement between the income bands. At the same time, we have some public sector bodies who've moved into the sector that didn't previously exist, for example, the Canal and River Trust, and we have other organizations that have grown out of mergers. So even though it appears that the share of income going to small and medium-sized organizations is shrinking, the actual amounts of money they receive has remained more stable, and you can see that in the chart on the right side. I will now hand over to Elizabeth, who will be talking about what this data means.
Thank you, Lisa. So we've seen the makeup of the sector, and it's really interesting to look at this in the face of what's happened over the last couple of months. And particularly, I think it's obvious to all of us that the magnitude of the crisis means that the size of charity is not necessarily a safeguard. In particular, being big doesn't mean that an organisation won't suffer from the economic shocks caused by the pandemic. What is going to probably happen is that different size charities will face different challenges. So bigger organisations are more likely to own buildings and hold some reserves, which will help. However, their operating costs are also higher in terms of staff and premises. They're also likely to have larger liabilities such as pensions and loans. Smaller charities, on the other hand, are more likely to have lower operating costs or to be solely volunteer-led, which may make them more flexible. But the issue for them might be the instability associated with short-term funding streams, especially those that have received specific COVID-related funding and for which this funding has been the difference between survival and closure. With staff on furlough, smaller charities might also have seen governance and operational responsibilities blurring, with trustees having to get more involved. So charities will respond differently to the challenges ahead. And we are already seeing, for example, that large charities have taken a hit and are having to make difficult decisions as a result. In particular, many have had to consider changes to their workforce. So a quick skim of the papers over the last couple of weeks and over the last month shows a number of household name charities that have had to look at their workforce and announce quite dramatic redundancies ahead. I'll hand over back to Lisa now for the next set of data.
Thank you, Elizabeth. So now we're moving on to look at the sector's finances and what has changed in income and the different income sources. But again, before we go into the details, we'd like to find out how your income situation is changing. So you will now see another poll question coming up on your screen, which is supposed to tell you about the changes in income. Yeah. So please tell us, for the current financial year, what changes are you expecting in your total income compared to your initial budget? And please include all income, even if trends might differ for different income streams. We just want to know what the overall situation looks like. However, we are aware that some types of income streams are likely to be more affected than others. And Elizabeth will unpick this when she's talking about the implications. And we will also see in the data how different income streams have developed over time. We will now see the findings. Josie, can I ask you to go through the findings for me?
Sure. So it looks like the largest proportion of organisations will have less income than budgeted, are expecting less income than budgeted. So that's 71%. 21% are expecting the same income as budgeted, and only 8% are expecting more income than budgeted.
Thank you, Josie. This is really interesting, and we will go through some of the implications and what the picture looks sector-wide. So based on the latest Almanac data, the sector has been doing fairly well, but of course, this is all pre-COVID. In 2017 and 18, both the total income and spending of the voluntary sector grew. However, income growth has been slowing down. Income was up by 1.2 billion, which represented a 2% increase. This is the same as the previous year, but it is lower than rates of 3 to 6% 3 years prior. And when we look back at the financial crisis in 2008, not just the number of organizations fell, but income also fell by 4% in 2008 and 9, but it bounced back to similar levels of growth after 5 years. The Almanac not just allows us to look at income overall, but also where the money comes from. In 2017 and 18, the public remains the largest income source for the sector. It makes up almost half of all the sector's income. It was also the main driver of overall income growth. Even though this includes two very large individual legacies, earned income from the public also grew by 3% and now stands at 12.6 billion. And this includes fees for services such as membership subscriptions and trading activities such as charity shop sales. At the same time, donations from the public have remained stable. Government is the second largest income source for the sector. In 2017-18, the sector received over 15 billion from government, an amount that has remained largely stable in the recent years, as you can see in the bars. However, while other income sources have grown, income from government as a proportion of the sector's income has fallen almost continuously. It remained at its lowest point of 29% compared to 37% in 2009 and 10. And I will hand back over to Elizabeth to talk about the implications.
Thank you. So as Lisa said, the data on income composition really helps us understand why certain charities have been more affected by others due to the pandemic. Over the past 3 months, we have seen that earned income, particularly fees for services such as membership subscriptions and trading activities such as charity shop sales, have been the most vulnerable to the effects of social distancing restrictions, which will negatively impact on income generation. And the latest survey that NCVO conducted in partnership with the Institute of Fundraising, the Charity Finance Group, and PwC confirms this. And so does the quick poll we did at the start of this section. So in the latest survey we did, we were looking at the period, we carried it out between the end of April and the end of May, and we asked respondents to tell us about what they had originally budgeted in terms of income and their actual income, looking at the period between the end of March and the middle of May. And this was to help us assess what the financial impact of lockdown has been on charities. And on average, respondents told us that during lockdown, they had received 29% less income than what they had originally budgeted for this period. Interestingly, again, there are major discrepancies between the income sources. So a key finding was that charities reported on average that trading income was 72% lower than expected. Other forms of incomes were not affected quite so much. So, for example, voluntary income was only 14% lower. And actually, income from grants from trusts and foundations was 29% higher than expected. And income from government, again in the form of grants and contracts, was also higher than expected, up by 51%. So, this frustratingly means that charities that over the past decade or more have put a lot of effort into developing a social enterprise model are likely to have suffered more of an impact due to the crisis. And a key example is that of medical research charities that have charity shops and quite strong on trading. But if you look at the latest data released by their membership body, the Association for Medical Research Charities, they're showing an immediate impact of 38% loss in fundraising income. And most worryingly, the effects of this is that they are going to have to make a 41% decrease in medical research spend over the next year. That said, I think it's also, having spoken a lot about trading, I think it's also important to think about how voluntary income is likely to be affected, especially longer term, and even more so because, as Lisa said, it has consistently been the largest source of income for the sector. So the Charities Aid Foundation has constantly monitoring public reactions to charitable giving, and it has done so also during the crisis and has issued a number of coronavirus briefings. And this draws out some really important implications on public donations. So it has seen that charities supporting the NHS have garnered the most support, with 40% of people saying they are likely to donate to over the next 3 months to one of these charities because of the crisis. Local and national charities are the next most popular at 34% and 23% respectively. This aligns with previous research that shows that when there is, for example, when there is a natural disaster abroad, the UK public rally to give and donations to international charities rise. So it's understandable with the coronavirus crisis now on the UK's doorstep, for the time being, people plan to give their money locally, either to NHS associated charities or other frontline help. The other issue is that actually people are also concerned about their own income over the next 6 months, given the economic situation in which we are. and are likely to say that they will donate less than usual because of this. So people are saying that the crisis has reduced their disposable income. So against this backdrop, fundraising income from individuals to charities is an immediate concern, as people are facing unexpected financial pressures and will hunker down to look after their family finances before donating. And now back to Lisa for the next set of data.
Thank you, Elizabeth. Now, following on from income and income sources and how they might be affected, we will now look at how assets and reserves have developed. And again, we have a question for you, for the audience, and we want to find out how many reserves your organizations hold. So you'll see another poll coming up now. Please tell us how many reserves you have in terms of months of spending. So we're not asking you about your total reserves in monetary terms, but how many months of spending your reserves will cover. For this is a really useful way to look at reserves, and this is also what we're reporting on the Almanac. So when I will be presenting the current numbers for the sector as a whole, you'll be able to compare your organization against it. And we will also find that reserve levels differ quite notably between different types of organizations and sizes. Josie, can I ask you to go through the findings once we see the results?
Sure. So in terms of months of spending, it would seem like most organisations on this call have, well, 36% have 6 to 12 months worth of reserves. The next most is 3 to 5 months with 30%. Only 6% have no reserves and 14% have more than 12 months.
Thank you. That's very interesting, especially when we're now going through what the Almanac finds for the sector as a whole. So in 2017 and 18, the sector's total net assets grew to 142 billion, and they marked another record high as seen in the top line. Investment assets make up 2/3 of the sector's assets, and although they continue to grow and have now fully recovered from the financial crisis in 2008, the increase this year of 4% is smaller than in the last 4 years, when they grew on average by 7%. And grant-making foundations are the most reliant on income from investments. It makes up 27% of their income, compared to 8% for the sector as a whole. Similar to assets, the sector's levels of reserves grew in 2017 and 18, and they reached pre-financial crisis levels for the first time. As mentioned before, levels of reserves can also be expressed in terms of the number of months of spending they could cover, and on average, organizations hold reserves of around 15 months. However, that also includes grant-making foundations that normally hold a lot more. So when they are excluded, organizations hold only 7 months of reserves on average. About 1/4, 23% of organizations do not hold any reserves at all, and that is much higher, as you saw, compared to the profile of our respondents in the audience today. When we look a bit deeper, we can also see that levels of reserves differ greatly by subsectors. So they range from 36 months for grant-making foundations to village halls with only 2 months of reserves in terms of spending, right at the bottom. One of the reasons why research ranks so high up with 71 months of reserves is because it includes the Wellcome Trust, which accounts for almost 1/3 of the sector's reserves alone. And now I'm going to hand back to Elizabeth to talk about what this means.
Thank you. So I guess the first thing I would focus on is the finding that the sector's reserves had grown back to the levels before the 2008 economic crisis. We know that over the past 3 months, and many charities have been making use of their reserves to cover operational costs. Now that's nothing to be unduly alarmed about, because the purpose of building reserves is exactly to support an organisation during financial difficulties like the ones that we are facing at the moment. However, there are implications longer term in terms of how the sector will be left in a potentially fragile position because of this, especially because pressures on income and expenditure are likely to remain for the foreseeable future. So the ongoing spending of reserves presents a number of challenges for charities. First of all, reductions in reserve can weaken the balance sheet of many voluntary organisations. Also, the effect of reserve spending may leave many organisations unprepared for any future downturn or even worse, a second wave of the pandemic. So we may see a delayed effect of the crisis, with organisations shrinking considerably in size after spending down on their assets. There is an additional challenge for the charity sector, specifically in relation to grant-making charities, who will be very much aware that many operational charities will be looking to them to plug the gap in their finances. But many grant makers will be facing their own difficulties, as they are heavily reliant on investment income, and we've also seen investment values fall. So in the longer term, this fall in investments might impact on the ability of grant makers to give out funding to the sector. So these quite widespread and long-term and potentially severe implications of the coronavirus on charities have actually been acknowledged on a number of important levels. So, for example, the Charity Commission and the SORP-making body. The Charity Commission seems acutely aware of these challenges and has promised, for example, to be as flexible and pragmatic as possible when regulating charities, and has issued specific guidance, for example, on serious incident reporting and allowing an extension to the annual return deadline. And the charity's SORP-making body has also issued advice on the financial reporting implications that may arise from the current circumstances. So it's worth looking at both these sources to make sure that trustees, and when preparing, that trustees consider what sort of information they need to be thinking about and including, for example, in their accounts. Lisa, back to you.
Thank you. Moving on from the sector's finances, we will now want to look at the people working in the sector. And again, similar to the other sections, we have a question for you on the changes that you are expecting. So you see a poll now coming up on your screen. We want to know, what changes are you expecting for your paid workforce in the coming 6 months? If you don't have any paid staff, don't worry and just ignore the question. Following the immediate crisis, it is very likely that organizations are going through periods of change. So even if your workforce is staying the same, it's now more important than ever to also manage staff well-being. Before the Q&A, as already mentioned, Josie will point out some work that we have done in this area, and we will also signpost to some useful resources. But now it's going to be interesting to see what changes you are expecting in your paid workforce. Josie, can I ask you again to go through the findings?
Sure. So it looks like the majority on this webinar feel that their workforce will stay the same, so that's 57%. 30% feel that their workforce will reduce, and only 13% feel that their workforce will increase.
Thanks, that was very interesting. And we will go through what this might look like for the sector as a whole. In 2009, again, this is pre-COVID, employment reached 900,000 for the first time, which represents almost 3% of the total UK workforce. And since 2010, the number of people working in the sector has grown almost continuously. Spending on staff costs makes up more than 1/3 of the sector's total expenditure. When we dig a bit deeper, we see that the largest number of voluntary sector employees are working in social work, followed by residential care and education. Nearly 1/3 are employed in London and the southeast of England. In terms of who works in the sector, the majority are women, which make up 2/3 of employees. Voluntary sector employees are slightly older than other sectors, and they are predominantly white. People from BAME backgrounds make up 9% of the workforce, which is lower than in the public and the private sector, where this figure is at 12%. It is also lower than the UK population as a whole, with 13%. When we look at employment patterns, we find that voluntary organizations have a higher proportion of part-time employees than other sectors. 37% of voluntary sector employees work part-time, compared to 29% in the public sector and 25% in the private sector. The sector also has the highest proportion of employees on temporary contracts. And now back to Elizabeth to see what the implications are.
Thank you. So I'm just going to reflect on the point Lisa made at the start, that we, despite the steady growth of the sector's workforce, we expect that it will decrease over the next year, although I am very pleased to see that the majority of the audience have indicated that their workforce will stay the same. The reason why this is our prediction is that whilst the government job retention scheme has been helpful in supporting many organisations through the immediate crisis, and in fact, according to government figures, more than 160,000 charity staff have been were furloughed during the first 6 weeks of the scheme. Upcoming changes to the scheme, it's very likely that job losses will affect some sectors more than others, and particularly some parts of the charity sector more than others. The reason for this being is that the job retention scheme takes a one-size-fits-all approach, but the crisis at its heart is sectoral. As we were mentioning earlier, there are certain parts of the sector that rely, for example, on trading and fundraising, all these activities that are more affected by the social distancing measures. So these activities will take longer to resume back to normal. At the same time, though, the job retention scheme is gradually tapering down. So there is a very high possibility that certain parts of the sector will get to a point where the job retention scheme support is no longer available, and therefore will have to make difficult decisions about its workforce. It's quite frustrating because, as you can see from the current slide, HMRC doesn't look at the charity sector on its own. It takes a different approach to looking at the use of the job retention scheme. So the government figure about 160,000 charity staff actually comes from a response to the Digital Culture, Media and Sport Committee, but it's likely to be based on claims collected in some way. And back to Lisa now.
Thank you, Elizabeth. So in our last section, we will look at volunteering rates and who is more or less likely to volunteer, and we will also discuss how this might have been affected by COVID and social distancing measures. But before we go into the data and the implications, we have another question for you. And we want to find out, and you will see the poll question coming up now, we want to know whether your volunteers have been able to continue volunteering, if you have volunteers. With social distancing measures coming into place and many organizations having to move solely online, it is very likely that volunteering might not have continued for some volunteers or many volunteers. However, there are also examples of new types of volunteering, and Elizabeth and also Josie later will talk a bit about those, and we have some really good resources later on giving you some inspiration of how to keep volunteers engaged during this crisis. Josie, can I ask you to go through the findings?
Sure. So it looks as though the largest proportion of this audience have 51% have said that yes, some of them have been able to continue to volunteer. So that's the largest proportion. 18% have said yes, most of them. Interestingly, 28% have said no, that their volunteers haven't been able to continue volunteering, and only 4% have said all of them.
Thank you. That's very interesting. And in the Q&A session, we not just invite you to put questions, but also share some of the reflections you have. So if you have some very interesting things to share of how you've been able to move some of your volunteers to different kinds of volunteering opportunities, then please feel free to share those with us as well. Now we're going to go through and see what the latest data tells us about volunteering. When we look at overall levels of volunteering, we can see that the number of people volunteering has remained stable. In 2018-19, more than 1/3 volunteered at least once a year for a group, club, or organization. This is almost 20 million people across the UK. In terms of regular involvement, there are 22% who said that they volunteered at least once a month. When we look at in terms of who volunteers, there are some differences by demographics. People aged 65 to 74 are the age group most likely to formally volunteer on a regular basis. 28% of them volunteered regularly compared to 15 to 24% for all the other age groups. There are also differences when we look at socioeconomic factors. For example, people who live in less deprived areas are more likely to volunteer, and volunteering rates are generally higher in rural areas. Again, I will hand over to Elizabeth to talk about what this data means.
Thank you. So when the crisis hit, face-to-face volunteering suddenly had to be suspended due to social distancing measures, and shielding also means that overall rates might have dropped because many of the most regular volunteers probably fell into an at-risk group, and that seems to be reflected in the responses to the poll we did at the start of this section. However, we also saw a sort of groundswell of public response to the pandemic and witnessed some of the most adaptive and responsive volunteer recruitment and engagement we've probably ever seen before. So thousands of people came together in more than 700 mutual aid groups across the country, while the NHS Volunteer Responder Scheme received around 750,000 volunteer applications. So this raises a number of interesting questions. First of all, in terms of recruitment, how does this top-down approach to encouraging volunteering affect volunteering for other organisations? Were the people who came forward mostly people who had never volunteered before, and so the scheme activated non-volunteers, the NHS Volunteers Responder Scheme, or did it divert existing volunteers away from voluntary organisations? I think it'll also be interesting to see what the long-term effects of a sort of state-led campaign of volunteering will be. Will it increase the engagement in volunteering in general, have no effect, or perhaps even discourage from future volunteering? The reason why I put this question forward is that whilst the NHS Volunteer Responder Scheme received a large volume of inquiries from prospective volunteers, initially it seemed as if it wasn't able to meet this demand. So, for example, the latest data says that only 100,000 volunteering tasks had been allocated. So meaning that the majority of those who volunteered are yet to be called to action, which inevitably is likely to cause frustration. So to what extent might experiences like these discourage people from volunteering in future? The third point I wanted to make is following the fact that lockdown and social distancing have also accelerated new ways of getting involved. as more opportunities for people to volunteer remotely and using digital technologies are created. So before the crisis, NCVO's Time Well Spent survey found that only 6% of all volunteers volunteered exclusively online. But over the past few months, we've seen a surge of things like check-in, chat volunteering, phone calls, and new ways for people to volunteer remotely using digital technologies. So it'll be interesting to see whether these new ways of volunteering embed and actually become increasingly common over the next year or so. And that's it from me.
Thank you, Elizabeth. We're now going to hear from Josie and also our sponsor, Richard, with some really useful guidance and resources to the things that we've been talking about.
Thanks, Lisa. So yeah, just to run through a couple of bits of practical support that NCVO and also other organisations have to offer to help you to deal with some of the challenges that have been highlighted. So to start with, in terms of effective leadership, so Elizabeth outlined in her initial slides some of the kind of operational challenges facing charities of all sizes. And so to address these challenges, obviously effective leadership is going to be crucial. And effective leadership essentially means ensuring that boards of trustees and their executive know what to focus on and are clear about their roles and responsibilities. So to help with this, we have done 2 webinars focusing on board leadership and also the key things that trustees need to focus on. So do have a look at those. I would also suggest you have a look at our NCVO's governance wheel, which is a great tool to help you or your board develop good governance. So it helps you understand the shape that your board is in, but it can also help you think about what steps you need to take in order to make your leadership as effective as possible. We also have some kind of tools on financial support and management. So obviously it's crucial, that all organisations are aware of the financial support that is available to organisations at the moment. So most of you are probably aware of the government guidance, which is really helpful on this and the support that is available. Just to flag, we have also done some webinars on this. One of those was with the National Lottery Community Fund, who spoke about the purpose of their funds and what they are looking for in an application. So if you're thinking of applying to them for support, do check that out. And then also to flag that we have just launched our online training, which the first one of which is going to be covering writing successful bids. So obviously with increased competition for limited funds, organisations are going to need to ensure that they know how to write a successful bid. And then finally, just to flag, I think as has unfortunately been clear, is that many organisations will be facing financial difficulty and possibly insolvency in the coming months. So we have updated our guidance on this. I'm going to hand over in the next slide to Richard, I think, to speak a little bit more about Saracen's practical support regarding investments.
Thank you. And I note I come at this from 2 angles. One is overseeing sort of 440 portfolios or charities and about 6.5 billion of assets, and seeing how the crisis has affected an extraordinarily wide range of charities. But also I personally chair the St Paul's Cathedral Investment Committee, and we are right at the pointy end because 80% of our revenue comes from visitors. So it has been quite extraordinary to see the extent to which some charities have almost been cut off at the knees in terms of just a cessation of any income that they might have got this year. And I've seen that personally, and I've seen it across some of the charities we look after, but all the way through to some of the big endowed funds who don't raise money anymore, who might this year see, particularly if they're very internationally diversified in terms of their investments, might see an income cut of less than 10% and then perhaps growth next year, all the way through to some charities with perhaps more UK oriented portfolios where their investments might see a 25% drop in income. But I think I'm just saying that it's affecting different charities in very, very different ways, and it's quite galling to see that at times. But all I really wanted to say is everything that I'm seeing at the moment just drives home the importance of having a really, if you are lucky enough to have reserves and endowments, to have a really robust strategic investment policy. That there is only one thing that really hammers investment portfolios, which is becoming a forced seller at the bottom of the market because something came to light that caused you to have to realize assets much more quickly than you had thought might be the case. So the compendium, and I think you're looking at a copy of a cover of the latest compendium. This is a document we've written now since the late 1990s, and I've highlighted one of the key chapters. It's a very educational publication for those who haven't seen it, but the crux of it is helping trustees and executives create, monitor, manage appropriate investment policies that are specific to them, and that, if constructed well, should ensure in most scenarios that you don't have to dip into the more volatile asset classes, and that you do have conservatively invested reserves to call upon first. And for me, that is absolutely mission critical. I know for some time now there has appeared to be a horrible opportunity cost of investing some of your reserves or endowments in a very conservative manner in cash and bonds because the returns yields have been so low. But a moment like this just reminds us that the perceived opportunity cost is typically much less than the damage you would have done if you'd had to dig into the more volatile investments back in February or March or even early May. The thing that really differentiates this and actually allows people, I think, to, if they need to, change policy from a position of strength is the most extraordinary rebound in markets that we've seen, such that a lot of the endowment portfolios and reserve portfolios that we're managing are effectively flat on the year, and therefore sort of bear no relation to what's going on in the underlying economy. So even for people who've been caught slightly off guard by this, you have the potential to restructure your portfolios from a position of strength. You know, we're coming off the back end of a decade of very, very strong returns, and therefore the ability to perhaps reallocate at levels that we were at before the crisis hit, I think gives everyone an opportunity to sort of shuffle their assets around so that they're suitable for the period ahead. And my final comment, we've made, everybody's talked about a loss of income in the sector. I think, again, we do need to be reminded that because of this rebound and because of the decade of very strong returns we've just seen, many charities are looking at asset bases in terms of their reserves, endowments and investments as big as they've ever been. You know, they've probably come off the back of a decade of making real returns of 7% per annum. And I doubt most charities have been spending 7% per annum. So this is the prime moment for particularly the big endowed grant makers who have enjoyed this rise in markets over the last decade. I think we're seeing a lot of them adopt total return spending policies. And yes, they might see a small fallback in their investment income this year, perhaps even next year. But a lot of them are dipping into those capital gains they've made during the feast years of the last decade to smooth out their spending. And I think a lot of beneficiaries, I'm hoping, will be pleased that those big endowed charities, it's not just about the income, it's about their capital bases, and the total return policy will allow them to smooth spending both over the good period and then over the bad that we're in at the moment. And I think at that note, I will hand back over just to say, if you want a copy of the compendium, please do have a look at our website. And if you've read it and you think it was interesting and you'd like to talk, we run a whole range of training programs around the compendium. And like everybody else, we have gone online, embraced technology, and we're doing a whole raft of webinars and seminars online to help people through the tough times. So thank you to NCVO again for the almanac. I think there's some fascinating data in there, and I hope it continues to be published for many years to come. I think over to Josie.
Thanks, Richard. So I want to have a good 10 minutes or so for questions. I'm going to whiz quickly through these last few points, just to say that we do have obviously managing and supporting your workforce and staff wellbeing has become a kind of key concern, particularly in recent months for organisations. And we've done a really nice blog about how to support employee wellbeing during coronavirus, and that was kind of, we had lots of voluntary sector organisations giving their own practical tips and resources for that, so do check that out. Obviously the reduction in workforce is you know, possibly, we think will happen, and we do actually have an upcoming webinar on how to manage operational change and sort of looking at that redundancy process, but also helping you to think about how you can create psychological safety for your staff when you're going through a period of significant change. So do check that out. There are a range of resources that we have around volunteers and keeping volunteers engaged. We've done a blog on keeping volunteers engaged during coronavirus, which we've linked to there. And then we do also have a webinar coming up next week, and that's going to be where we're going to share what voluntary organisations have learnt since the lockdown in March. So do have a look out for that. Hopefully you will have all this signposting information on you anyway, so do check out those links. Okay, I think we're now going to move on to some questions. So we've had a few questions in. So I think the first question, I'm going to ask Lisa really. So since the data is quite behind, when will you have more up-to-date data on the impact of COVID on the sector?
Thank you, Josie. Yeah, as we mentioned, unfortunately, we always like 2 years behind with the Almanac. That's because financial accounts do take some time until they're submitted, and the analysis takes a while as well. So in the actual Almanac, I think we will only see post-COVID data integrated in 2 years. In the meantime, there is a lot of research happening that is looking at the immediate impact of coronavirus on the sector. So we've been doing surveys with partner organizations, IOF and CFG on that, and there are some surveys that we can link to. We're also starting some work with Nottingham Trent University, a project that is actually a long-term project where we're going to have a panel of organizations that we're going to track over time to see how they're faring in this really difficult time, and that's going to run for 1.5 years. And hopefully that will give us a lot of insights into how organizations are affected by this crisis. We're also planning to do some analysis on charity mergers and closures. We had planned that for early this year, but we have put it on hold because of the circumstances. But we're planning to pick this up later this year, and this will be based on charity commission data, which probably in a couple of months we will see updated and changes, and we can see how the register is going to be affected, the number of organizations, how they will be affected from this crisis. So do look out for those, and we will share links to the other surveys I mentioned in the post email.
Great, thanks, Lisa. Actually, a couple of people asked about any upcoming research or projects that you've got in the kind of pipeline. So I don't know if there's anything else on that note that you want to add, or whether that covers it.
I think that covers most of it, but I will make sure that we include other resources that I haven't mentioned yet in the emails we share after the webinar.
Great. Elizabeth, a sort of point for you really. So a lot of organisations are currently talking about kind of collaboration and partnerships. Just really, do you have any thoughts about how organisations might start to collaborate or work in partnership in this new normal?
That's something that's really come up in a number of webinars, actually, not only this one, but I think there's definitely been an increase in appetite for working jointly and in collaboration. So it's interesting to see that the question has come up again. I think there are various ways in which charities might want to collaborate. You know, you might want to do something formal, or actually, like, you know, in a practical way. Is it about sharing office space, as maybe charities will be looking at more remote working, so they'll need less office space, in which case they might just want to share a space between themselves. Or it might come to things like working together on key policy aims, like NCVO is doing with other infrastructure bodies at the moment. Over the last, since the start of COVID, we've been working with in partnership in a way that I don't think we've ever done before, with Akivo, NAVCA, Directory for Social Change, Charity Finance Group, because the challenges in terms of policy and influencing government were so big that on our own we wouldn't have achieved what we have managed to achieve so far. So I think there are a range of ways in which charities will want to collaborate. The interesting thing is, as I say, the fact that there is so much appetite. One thing I would also flag specifically is potentially collaboration when it comes to public services. So a project that NCVO started working on before the situation we are in before, but was really important, was a project called Rebalancing the Relationship, and it was looking at how charities might want to collaborate more when it comes to bidding for contracts and delivering a contract. That has slightly paused again because of the crisis, but we are picking it up already, and it'll be really interesting to see whether there is again more appetite specifically in that area to be less competitive, see whether, you know, larger charities can bring on smaller charities, or local charities within the same area can work better together. I think it's definitely a trend that is emerging.
Great, thanks, Elizabeth. We have two kind of fairly data-specific questions really for you, Lisa. So read the kind of income growth chart. Is that adjusted for inflation?
Yeah, all our time series that is relating to financial figures is adjusted for inflation.
Cool. And someone asked a small point about what's the difference in volunteering levels when you switched to the new survey. So they're just wondering about the methodology change that contributed to the drop in the new survey in 2013-14.
Yeah, that's very well picked up. That is very difficult to well, it basically what happened is that the methodology changed in a way that it prior to what we're currently using, the survey was done face to face. So people were selected, and then they were someone would go there and run them through the survey, and they would fill in the paper. And now this is all moved online with the new survey. And although this survey is done by DCMS, they have done some really good testing around how that's affecting response rates. We have seen a drop in volunteering levels, and we think that this is largely due to this change in methodology, that having a face-to-face survey makes people feel a bit more pressured to say that they are volunteering when they might not be volunteering. So now that the survey is done online and is just filled in by the people individually, they don't have that kind of social pressure to answer maybe something that is not true. But what we have seen is that after a couple of years now with the new survey, that the levels have stabilized. So they are basically the same level, but slightly lower than before.
Great, thanks, Lisa. I'm aware that it is 3 o'clock. just before we finish, I just wanted to say that, because we've had, I think, 1 or 2 questions about accessing funding and where people can find out about what funding they can access. So just to say, and I didn't mention it in our practical support bit, but we do have a kind of Funding Central platform which provides you with information about thousands of kind of grant opportunities that are available. So do check out that platform, and particularly if you're a smaller organisation, you can access that information for free. So do have a look at that. I think that's all we've got time for today. I'm aware that we haven't managed to answer all the questions, but I think we've covered a lot of ground, and I hope you found that useful. I think the only final thing to say is a final thank you to everyone, but particularly thank you to Saracens and Richard for being part of this webinar. And we look forward to seeing you at another webinar, hopefully next week or in the future. Thanks a lot.